So, Rajiv, a lot has been spoken about the scheme that you manage. We want to know a few things about the man behind the fund. So, we will ask you a few quick questions, okay? Are you ready? So, the first question, can you share with us one defining incident that made you a better investor?
So it's not just one incident, but largely interaction with a person called Mr. Chandrakant Sampath 20 years ago highlighted the importance of investing in good quality companies rather than just buying very, very inexpensive stocks.
Indeed. In fact, some viewers who may not be aware, Mr. Chandrakant Sampath was a legend in his own right. All right, Rajiv. Now, second question. Okay. So, if someone wants to become better at investing, what are two or three books that you would recommend? And which is your favorite book?
So for a very, very new person, something like the psychology of money, which would give idea of asset allocation and things like that. For someone looking towards equity investing, I would recommend One Up on Wall Street by Peter Lynch, and I would recommend Intelligent Investor by Benjamin Graham.
And which one is your favorite?
I liked reading One Up on Wall Street. It's a very, very easy read and very accessible to the first time investor.
Great, great. Thank you for those book recommendations. Now, I want to ask you something about retirement. Okay. If we look at Warren Buffett, right, he retired in his 90s, and we wish that you also have a similar long, fulfilling career. But if you decide to retire, what would an ideal retirement look like?
So, looking at companies, business trends, markets, all these interest me. So, as long as health permits, I would probably keep doing that. The other aspects, which is regulatory aspects in terms of the overseeing a fund or interacting with AMFI and the regulator, or client interactions, distributor interactions, media interactions, those would go away. But otherwise, the activity that I am doing currently is something that I enjoy doing, and probably I would continue doing that in a personal capacity.
So, talking about Warren Buffett, I have a trick question for you. So, Buffett has said that a fat wallet is the enemy of superior returns, right? So, as the asset under management grows, fund manager find it very challenging to generate higher returns. That's because your investment universe starts to shrink. I want to know what are your thoughts on this belief of Warren Buffett.
That is absolutely correct. But for that, one has to define what is a fat wallet. Do we say we are fat wallets? I would humbly submit not. So, with our current assets, we would be maybe 0.1, 0.2% of the overall market cap of the country. Someone in a different context was just pointing out to us that at one point in time, Morgan Stanley, with its domestic fund and the FII operations, they were managing 2% of India's market cap at one point in time. This is in the mid to late 90s. So I don't think we are there yet. I would think our wallets are pretty lean so far.
So, what would be your definition of a fat wallet?
So the wallet size has to be correlated with the churn strategy. If the strategy is rapid buying and selling, then the impact cost becomes that much higher and flexibility is lost. If the churn rate is, let's say, 15%, then at, let's say, 100,000 crores, our annual buying selling would be to the extent of 15,000 crores. So this our impact cost would be the same as a 15,000 crore fund, which has a 100% churn rate. So it has to be linked with the investment style and strategy as well.
All right, so the last question now. So, when you're not thinking about investment, what is it that you're doing?
So various things. So travel, watching OTT content, spending time with family, reading, listening to music, playing online chess, various interests apart from investing.
Thank you so much, Rajiv, for candidly answering all the questions and for this quick chat.
That's
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.